Good morning, Paul Georgie from Allendale. It's December 2nd, 2010. Well, we've got a lot of volatility already this morning. We had the dollar down sharply here overnight, down 40 cents at one time. Now, as we speak, the dollar is higher. We're up 14 points. Crude oil is actually lower, and gold has reversed here from their earlier higher trading range. We were up several dollars, $3 to $4 higher there. Now we're down $2 to $3. Stock indexes have come off of their highs and actually are about the unchanged level. So that may have an effect on the grain markets here today. We've got not a lot of news out here this morning. We did have the export sales come out this morning, 758,000 corn. They were looking for 500 to 900, so that's certainly within range. Soybeans on the high end of the range there, are actually higher than the high end, at 1.4 million tons sold. Trading estimates were 1 to 1.3 million tons. And in wheat, 700,000 tons sold. We were looking for somewhere between 500 and 700,000 tons. Dominating factors, I think, in the market today are the weather conditions in South America, weather conditions in Australia, still a major factor. We've got the weather in Australia, still too wet, can't get the crop harvested. Quality problems, milling problems, getting enough milling wheat is an issue there, and that continues, and that's not going to go away right away. The South American weather also is a problem where the dry areas have got a little bit of rain, but they need more, and the forecast is not going to give us that rain right now. So that factor, plus China is still trying to control inflation. As they control inflation, it could put some pressure on overall grain prices and buying. But the reality is they still need to buy grain in order to control their inflation because the demand is so good. And need is for more grain and more soybeans, more oil production in China. So these are factors that are affecting us here today, and one of the dominating factors, we haven't a clue on what's going to happen, is the money flow. It's the first of the month. Is the funds going to come in, do some more buying, readjust positions? That is the important thing, and probably a big factor that we've got to keep an eye on and try to keep a handle on today. I think the thing that we've got to watch the most here going into the end of the week is where do the grain markets close. With the yesterday's strength, could be a turnaround week, but I think it's going to be important on tomorrow's close if we can close higher, and I think technicians are going to be checking that out very closely. In the livestock trade, cattle this morning down about 55 cents as we speak. Hogs are higher. Profit taking, I think, is probably the key word there. Cutout values in beef up 30 cents in choice, up $1.38 in the select, so things are still positive there. We think cattle trade and cattle futures should be well supported on any kind of corrections here on profit taking breaks. In the hog trade, problem is product. Cutout values are down $1.30 yesterday, continue to put pressure on this market, and as we and put pressure on the futures, and we are near some technical support. We need to hold those areas. I think key levels here today. Watch that very closely. I think if corn prices can rally back, we should see hog prices get some support from those outside influences. So as we always say, if you got any questions, give us a call here at Allendale at 800-262-7538. Don't forget to sign up for the Allendale Conference coming up in January. Things are filling up there, and we'd certainly like to have you. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.